International Capital Market Insights from ICMA.
Good afternoon. I am very pleased to welcome you to this very exciting webinar, which looks at the developments and challenges facing the debt capital markets in Africa. My name is Monwa, and I look after the fixed income, commodities, currencies, master agreements, and global markets of Africa region's legal advisory team within the Standard Bank Group. I have acted as the chairperson of the Africa Regional Chapter of the International Capital Markets Association. That's been for more than 4 years. And I've been recently appointed as the chairperson of the South African subcommittee of the Africa Regional Chapter of ICMA. ICMA has been active in the continent for many years, with our first members joining from South Africa in the early 2000s. And we've seen our membership grown from other countries, and notably Ghana, Nigeria, Cote d'Ivoire, etc. And to that effect, a further subcommittee of the African Regional Chapter of ICMA, well, comprising of members from outside of South Africa, has been established. And such a committee is chaired by Mr. Eko Afedzi. He is the managing director of the Ghana Stock Exchange and one of the panelists at today's webinar. As the Africa Regional Committee, we have been working on capacity building through education programs, and this webinar today is one way in which we seek to encourage debate on various issues affecting our markets in Africa. To that effect, we would be very pleased to get any suggestions for topics for future webinars, and we hope we will have a face-to-face interaction in the near future. And for details, you can find mine and Eko's details from the ICMA website should you wish to discuss any Africa-related issues. We are more than happy to attend to any of those. I will now hand over to Mr. Martin Sheck, who is the Chief Executive Officer of ICMA. He will introduce our panelists and will be leading today's discussion. Thank you. Over to you, Martin.
Thank you very much indeed, Monwa. And before I go any further, Monwa's wife had a baby yesterday, a baby son, so I'd like to again congratulate you. And I'm sure you're anxious to rush away and look after them both. But I'd also like to thank you very much indeed for the efforts that you've put in as chair and now co-chair of the African Regional Committees. It is an important area for ICMA, and to have your input on the ground here has been absolutely instrumental in driving our work forward. So, as Monwa mentioned, it is an exciting time. Not everybody who I can see amongst the participants is necessarily familiar with ICMA, so I might spend 1 minute just explaining exactly what we do and also focusing a little bit on what we've been doing in the African continent. But ICMA, the International Capital Market Association, is a membership association. We are focused on the way that the debt securities markets work, essentially the bond markets. We have 4 areas on which we particularly focus. One of them is the way the primary markets work. One of them is the way the secondary markets work. Repo and collateral markets, extremely important and a particular focus in this part of the world. And sustainability is the 4th pillar of our work, and we are very active in the green, social and sustainable bond markets. In each of these areas, we aim to set standards of good market practice based on input from the many members that we have globally. We have over 600 members based in over 62 different countries, and they cover the entire spectrum of the fixed income markets. So we have issuers, we have intermediaries, we have investors, so we have banks, we have brokers, all sorts of different sorts of investors, and also very importantly, the critical infrastructure providers such as exchanges, MTFs, the CCPs, CSDs, etc. And as Monwa mentioned, our activities in Africa have increased dramatically over the last 6-7 years. And we work regularly also with FrontClear, a development agency who are joining us today on the panel in a range of different countries in Africa, helping with the development of capital markets, the capacity building, in particular with a focus on developing robust repo markets. And today, of course, we're focusing on the debt capital markets in Africa as a whole, and we want to discuss the developments and the challenges. And I'm joined by a lineup of really experienced leaders in the capital markets, and all of them are based in different countries. Let me just introduce them briefly before we dive into the questions. Firstly, Monwa already mentioned Mr. Eko Afedsi. He is the managing director of the Ghana Stock Exchange, has worked with the exchange since its inception in 1990, but he's also been instrumental in the establishment of the Ghana fixed income market and has coordinated the automation of the important functions of trading, clearing, and settlement of the exchange. Next along the lineup, we have Philip Baiskis, and Philip for us is an extremely important counterpart. He is the Chief Executive Officer of FrontClear, and he has overall responsibility in steering the strategic direction of FrontClear, and he's chairman of its management board. And he was also involved as a founder of FrontClear back at its inception a number of years ago. Moving on, we have Chandi Mwenebungu. Chandi is Director and Treasurer at the African Export-Import Bank. This is based in Egypt, but has operations throughout Africa. Very, very pleased to welcome you to the panel today. Then like to move on to Jumoke Olaniyan. And Jumoke is Head of Market Architecture Division, which comprises 5 different groups: fixed income and currency markets, the equity markets, the derivatives markets, market regulation, and the academy, and that's for FMDQ Securities Exchange based in Nigeria. And last but by no means least, we have Zafar Parker, well known to many of you already. He's Head of Financial Markets Department at the South African Reserve Bank, and his department is responsible for a number of core functions, including monetary policy implementation and managing the gold and FX reserves. And previously, he was also responsible for the market operations department, so an excellent person to have on a panel. Now, with that, I would like to start drilling into some of the questions. But the first topic I want to touch on is the obvious one, and that's really the impact of the pandemic on the African continent's capital markets. And I think globally it's been absolutely clear that in terms of mitigating the impact of that and making sure that the markets are robust and resilient, the central banking community played an absolutely key role. And I imagine that that's also been the case in the African continent. But I'd like to hand that over to you, Zafar, to start the comments off. How have you at the South African Reserve Bank been engaging in trying to mitigate the worst impacts of the pandemic? And how has that coordination with other central banks worked through? And in your opinion, has the intervention of the central banking community had the desired effect?
As you mentioned, the COVID-19 pandemic has had a massive impact, a significant impact on global economies, and continues to have a big impact on global economies and economies on this continent as well. So the sharp slowdown really of the global growth over the last couple of months saw nervousness amongst many investors, or most investors, and this meant a substantial outflow of funds from emerging markets especially. Now, what has this then meant for economies around the world, emerging market economies, or economies on this continent? Many economies on this continent found it then extremely difficult to fund themselves, either through foreign inflows, which had stopped flowing into these economies. It caused difficulties for these economies and governments to raise capital, either in the domestic markets or in the foreign markets, because everyone seemed to be risk averse. And really, the situation continues to be prevalent until today in emerging market economies. Now, let's look at South Africa. Now, South Africa is one of the deepest and most liquid bond markets among emerging markets. But year two, we felt the brunt of the COVID shock. Global shock to financial markets spilled over to emerging market economies, and then obviously to economies such as South Africa. So in particular, in South Africa, what had happened was we saw that the government bond market, as well as the local money market, started showing signs of dislocations. Now, these dislocations were evident as bid-offer spreads, the price at which you buy and sell these instruments, of both government bonds, money market instruments, had widened. So people were reluctant to buy and sell these instruments, and trading volumes dropped dramatically. Now, with these dislocations evident, the South African Reserve Bank then stepped into the market by starting what is called a government bond purchasing program. The SARB, the South African Reserve Bank, had also introduced a number of other measures in the market, such as supplying cash on a daily basis, because obviously previously we had supplied cash at the discretion of SARB. But what we had done immediately is start the bond purchase program and started introducing cash to whoever needed the cash in the banking system on a daily basis, twice a day at first, actually. This, of course, was against eligible collateral. Now, these measures have certainly helped the bond and money market to function effectively again in South Africa. Well, not probably at the same level pre-COVID, but certainly much better than when COVID-19 actually started impacting markets. And then if you look across central banks across the world, they have embarked on similar measures to stabilize markets. And I would say, Martin, by and large, these measures have seemed to have had a positive impact on financial markets globally. So thanks, Martin. Those are my few words. I'm happy to continue if there are any questions.
Thank you very much, Zafar. I think you're right. I mean, the central banking community has really come together, and the measures that you've outlined here, I think, are measures which have been used globally and have, to a very large extent, helped stabilize the markets and help those markets to be able to intermediate capital as well as possible. Before we move on to the next question, is there anybody else who would like to make a comment from a non-South African perspective on any central bank intervention?
Okay, this is Eko Fezi. And generally speaking, we've had pandemic impacting negatively on our capital market in Ghana, and I suspect in other markets in Africa. But what we have seen is that there's a more negative impact on the equity market than the bond market. We've seen a strong growth in our bond market, and therefore you realize that it has rather brought about a shift in the type of investments that investors do normally make. So we've had an impact negatively on the equity market, which is down, but the bond market is doing well.
Thank you, Eko. Anybody else?
This is Jumoke.
Jumoke, hi.
So interestingly, in our fixed income market, it's been a bit of a mixed impact and reaction. On the long end of the curve, as you'd imagine, interest rates and yields have dropped significantly as a result of a withdrawal of liquidity in the markets, withdrawal of foreign investors in our markets. But what we experienced on the short end of the curve as a result of the drop in yields is a lot more of our corporates are taking that opportunity to rebalance their capital and funding structures.
Well, let's move on. What I wanted to do now was to ask a question really of Philip. Philip, you've been involved extensively over many years in really at the helping the development, the capacity building in the African capital markets. And I think you have a pretty holistic view of where these markets stand at the moment. So I'd be very interested to hear from you how you feel that these markets are at the moment, and the work that you've done at FrontClear in terms of helping with the development of market structures that can allow these capital markets to be a good counterweight to the banking markets. I think that from a policy objective, all of the countries have as an objective to have a vibrant and deep capital market that can really provide an intermediation route for private capital which will be complementary to the banking market. So with that, I might just hand over to you, if I may, Philip, and ask for your perspectives.
Thank you, Martin, and thank you for the invitation to participate today. It's a pleasure to be debating these issues with you. Indeed, I would broadly characterize Africa's capital markets, noting that quite a lot of important progress has been made in the last decade. Most leading economies in Africa have continued to expand the depth of the government bond market. In particular, yield curves have lengthened. Countries have done a good job at managing primary issuances and so on. But of course, there is still quite a limited liquidity, particularly in the secondary market. I think also if you look at the bond market, there has been impressive growth in recent years. A number of non-bank financial institutions have come to the bond market to issue. But overall, it's still a relatively illiquid and small market, and particularly the market for government securities is often a very much a hold to maturity type play rather than an active trade. What is also interesting, and you highlighted our focus at Frontclear, is to really try and sort out some of the basics. And we are very much focused on the money market segment of capital markets in Africa. And that is because it's our view that without functioning and liquid money markets, it's difficult to see how the bond markets can really become more liquid from their current status. And if you look at Africa, it's still the case that outside of South Africa and Nigeria, there are essentially no functioning repo markets based on actual title transfer and enforceable netting and the GMRA type style repo. So we are focused at trying to unblock some of the practicalities that comes with getting transactions to move in these markets. As you said in your introduction, we have been working with ICMA already for several years in two areas. We have done a lot of training and capacity building of market participants and regulators. And we are increasingly working on implementing regulatory reforms to try and improve netting laws, reduce recharacterization risk, things like that. In that regard, there is good progress being made. Ghana recently passed a netting law under its Corporate Act. Nigeria has finally passed a netting law, and other countries are actively looking to achieve those kinds of reforms. A topic that I always find interesting is the practical aspect of actually getting markets to trade. So today on the panel, we have both the exchange traded and the OTC markets represented. And certainly both models when it comes to fixed income trading have pros and cons, but there are a number of countries in Africa where it is still only possible to trade bonds on an exchange. And this makes things really challenging to build a repo market. So it's not always possible to achieve free of payment transfer of collateral. And it's certainly unreasonable to build or to expect a repo market to develop based sort of on a matched trading engine on an exchange. There needs to be a more flexibility in order to get these markets to going. Ultimately, our interest is to build financial infrastructure, whether that is strengthening central security depositories, helping them with guarantees, settlement guarantee funds, or actually setting up central clearing counterparties in the larger markets. Our view is that we first need to get some of the basics right, including enforceability of contracts, dealing with practical issues like being able to achieve free of payment transfer of securities, and getting that basic infrastructure right. And that should allow the leading economies to really get their bond markets up to the next level.
Thanks very much, Philip. And congratulations on a lot of the work that you do. It's extremely important, as you say, to build these robust capital markets, particularly at the short end, which is where these capital markets tend to start to build. I want to turn now, if I may, to Chandi to have another development bank perspective, shall we say. And I'd be interested to get your view. You operate in many different countries. I'd be interested to get your view for the entire region and how development banks as a whole can do more to foster capital markets development. And perhaps you can give us a focus from your own perspective of where your energies are being expended, both from a product and a geographical perspective.
Thank you very much, Martin. From a development bank perspective, of course, we are a development bank focused in financing trade, intra-African trade and extra-African trade. We work in all the countries in Africa, the entire continent. Our functional currency is US dollars, so we are quite dominant in sourcing capital out of the continent, but also within the continent. In the past, we sourced non-local currencies, so we focused more on hard currencies, and these are non-African currencies to raise capital to bring into the continent to work. But more recently, we shifted to also accommodate local currencies in the continent so that we can also contribute to the development of capital markets within the continent. So I would speak, of course, two elements: as an issuer in the international market, but also some of the efforts that we also do to the continent, we plan to do into the continent so that we can contribute to the development of capital markets in Africa. So let me start with the evolution of issuances of Eurobonds by African entities. We have ourselves as a Fortune Bank a 5 billion euro medium-term note program, under which we raise bonds. So we're quite seasoned in the market, the international markets, raising huge sums of money. Very recently, as I mentioned earlier, we actually listen to our customers and realize that there is a certain set of customers that requires local currency, and we're open to doing that. We've just registered a medium-term note program in Nigeria. We did that in January of this year. Unfortunately, we wanted to do something this year, but with the pandemic, we're now more focused on pandemic-related funding for our clients. But we will be issuing local currency in Nigeria soon. We also have planned to tap into the Francophone region of the capital markets, and this is in West Africa. We have plans on the pipeline to do something in Rwanda, in South Africa, but also in East Africa, Kenya and Uganda, to do something there so that we can help to contribute to what is currently happening there. Now, let me point out some of the observations that we have observed as a development bank. What we've observed as a development bank is an increase in activities in the Eurobond market by African entities. So a very good example is we see quite lots of sovereigns at the moment issuing in the international market: South Africa, Egypt, Kenya, Morocco, and many more. But we've also seen that the African entities in the past tended to issue medium-term, shorter-dated issues, but now they've elongated the tenors. Very recent tenors that we saw issued by Egypt, for example, after 30 years. That's pretty quite encouraging as a development. We've also seen a diversification. So we've also seen that in the region, there is, in terms of product, that is diversification in terms of product. So there is currently a focus on sukuk bonds, for example. I think South Africa has done a few of them, Egypt here, Nigeria as well, Cote d'Ivoire, to mention just a few. Another element that we've also seen as a development is the ESG perspective. So we've seen a few entities looking into issuing ESG compliant bonds. And a very good example, I think, is the FGB, which recently issued COVID-19 bond. The Africa Finance Corporation that issued a Swiss franc green bond. Both happened this year. Again, that's quite a positive, very positive development. And I'm sure many more entities, including African Export-Import Bank, are on the way to participate into those developments. On the local currency debt market, we've seen other regional entities, the likes of the African Development Bank, the likes of the Trade Development Bank in East Africa, who have already tapped the local currency element. FDB, I think they've issued in the past some bonds in Nigeria. They've issued in Uganda, in South Africa as well. So that's pretty, I think, a very promising element to also note. In terms of the last, I think, bit of the question where you asked us to see how do development banks, what can they do to foster capital market developments? I would possibly highlight a few elements here. I think number one is the credit enhancement initiative. I think one of the things that we ourselves as development bank do is we provide, among many products, a product called credit enhancement. I think we can come in to help in our continent to credit enhance some of the issuances of entities that would like to tap the capital markets, but because of their credit standing, the issuances could be expensive for them. And I think us as development banks can come in to add value in that space. Another element possibly that I can highlight would be the advisory services as regards to capital market issues. MDBs are quite seasoned issuers in debt capital markets, and I think we have quite a lot of capacity from our own issuances, but also more importantly, some of the few of them in the continent that we do. So we can actually add value by bringing in the advisory services element. The other element is the credit rating element. There are so many entities in the continent which are not credit rated. And I think as development banks, I think we can play a role to encourage most of the partner institutions that we work with in the country to get rated. And a very good example, in Afrexim Bank, we are rated ourselves by new rating agencies, and we have quite a very good capacity of people that do the credit rating process. So I think we can add value in the continent by providing advisory services as regards to credit rating, so that we can get these entities to debt capital market. So these are some of the things, Martin, that I could highlight out of the questions you asked. Thank you.
It's a very full answer, and it's absolutely clear that the role of the development banks is quite multifaceted, and you have I think a huge role to play in terms of encouraging others and helping build capacity and leading by example. So thank you very much for that, Chandy. Now, Jumoke, I'd like to bring you in now, if I may, and ask you a little bit about one of the comments that was made by Philip, which was talking about secondary market, or the lack of liquid secondary markets. Given your role, perhaps you could talk a little bit about the secondary market landscape and the concerns that I think we all have about liquidity in debt capital markets. And in your view, what steps could be taken to make deeper and more liquid secondary markets in particular, but perhaps a comment on the primary market as well? And how is that going to translate into opportunities for both issuers and investors?
Thank you, Martin. I mean, in this day and age, technology almost has us by the jugular. But let me go into the questions that you've asked. As much as there's been quite a lot of development over the last 10 years, just as Martin had shared, there's been quite a lot of significant development. If we take the continent as a whole, there still lingers a few bit of challenges that are impeding liquidity. Largely, there's still a little bit of investor confidence issues across various markets, and a lot of this is lingering as a result of past events that have occurred in various markets. While we've had technology, provide some level of development in our markets, the characterization of African markets where there's quite a bit of volatility and quite a bit of differentiation. Also, technology therefore has its limitations, and we may not have been able to harness the full extent of the benefits of having technology deployed in our markets.
Echo, I want to turn to you next, if I may, in that case, please. And there are a couple of things that came out. One of them was a comment also from Philip, which I think is quite a provocative comment. And when you look at the way that debt capital markets work in many of the very developed economies of the world, they're very largely OTC type markets and not exchange-driven markets. And there was an inference there that having more of a focus on exchange-driven markets in many of the African countries create issues. So I'd be interested to get your views on that. And I'd also like to sort of ask you whether you could expand that into some views on specific market structures or any particular lessons that you would like to highlight from the perspective of Ghana.
Thank you so much for the question, and also thanks to Philip. Claire has been very instrumental in the development of our market, and I would like to assure him and all others gathered here that we have a very unique bond market in Ghana. It is not exchange-centered or exchange bond market, let me call it that way. This is a bond market that was established by key stakeholders in the financial market as a whole. So they exchange together with the central bank, the association of bankers, the stockbroking firms, the dealers, etc., set up this market. So we called it the Ghana Fixed Income Market, which has a different governing arrangement and is led by the first deputy governor of the central bank. Then directly to the question, it is largely OTC. We do have 3 modes that you can trade on our market. We use the Bloomberg e-bond platform, which you can go through, which is linked to the clear settlement system. So there's flow from the Bloomberg platform directly, seamlessly to the CSD. Then we also allow OTC, where the dealers can do their trades outside this platform and book them in the CSD for settlement. Then for the brokers, we've also created another platform on our trading platform for them. So it's a multifaceted kind of trading platforms that we have that we've put together as a bond market. So in Ghana, it is not exchange-centered kind of bond market that we have, but largely OTC, and we're going to keep it that way in order to bring some flexibility and also encourage liquidity on this market. So that's the uniqueness about the market that we have in Ghana. This market is just 5 years old, and we've seen tremendous growth. We started 2015. We now have about 145 instruments, largely government issued instruments on this market. Corporate bonds is developing quite fast. We've issued about $2 billion, close to $2 billion worth of corporate bonds, and the government is about 18 billion or so. So the total market is close to about 25 billion US dollars. And in terms of liquidity on the market, it's around about 65% as we speak. We've seen the market grow from a $1 billion market in 2015 to what I'll call about $12 billion market as we speak in terms of trading. In terms of our local currency, it's moved from 5 billion Ghana cedis to 74 billion Ghana cedis, more than tenfold as we speak. So it is a market that is growing very fast, and we are being quite innovative. We just introduced repos on this market together with the central bank. So we're going to see very active trading of repos as we move along and be educating the players on the market. We are going to introduce securities lending and borrowing. We'll go with GIMSLA. We'll develop the guidelines as we move forward. At the same time, we'll promote corporate bond markets. And I heard Chandi talk about credit rating. That's key to us. We're working hard to see whether we can get a credit rating agency in the country, or we get our bonds, corporate bonds rated. So on the whole, we've seen quite a substantial growth in our bond market. It is flexible. It is getting very liquid. We'll continue with education, introducing new products on the market in order to grow the market. Let me end here.
Thank you very much, and that's very encouraging to hear. Before turning back to Jumoke, Philip, any particular response you wanted to make on that, since you brought up the point in the first place?
No, only to say that indeed Ghana has made incredible progress in the last years, and can only say I wish all the countries in Africa were as progressive and focused on developing their markets. Ika was absolutely right. One of the things that the Ghanaian regulators did achieve or change in the last year or so was to allow, for instance, for free of payment transfer of securities with a fixed framework around that. The Bank of Ghana issued repo guidelines which has adopted the GMRA as the standard for the local market. So Ghana, I believe, is at the forefront and sets the example of adopting international best practice, adopting global standard documentation, trying to achieve certainty on netting and removing these operational barriers to trading. So Ghana is certainly very progressive in this regard.
Thanks very much. Right, let's move back to you, Jumoke. You were in the midst of talking about secondary market liquidity and some of the impacts that deepening liquidity could have for both issuers and investors, I believe.
Thank you again, Martin. Perhaps let me just move on to, I think, steps that can be taken to continue to deepen liquidity in the secondary markets. I think it always starts with having a robust regulatory framework. And I mean, if the points that have just been shared by from the Ghana market shows, it tells you how that significantly supports any market. And of course, the objective will be to support enabling market structures and not have a stifling market structure. One thing that we've from research and experience over the years is adopting regulatory frameworks that promote disclosure, that are more disclosure based than merit based and rigid, definitely helps the flexibility and the interest of issuers in your primary debt markets. Another part is strengthening corporate governance and liquidity listing standards. Obviously, this will support your primary markets. You always want to promote the strength of the entities that are raising capital from the market from an investor protection point of view. And I think across the African continent, we're beginning to see a lot more of this. For those that are on exchanges, you find the exchanges having corporate governance indices and benchmarks for such entities. And even for those that are not necessarily exchange traded, there are minimum corporate governance levels you expect of such issuing entities to promote those governance principles. Another key area that I see that is becoming an emerging area is access to the capital markets. And I see the private markets becoming a very big space in recent times. A lot of the development that Africa needs, infrastructure, housing, technology, power, these companies that are involved in these businesses are private companies, and they do need to raise long-term based capital. But a lot of the regulatory framework we find across Africa is probably not as inclusive of private markets or private debt securities. And so this is an emerging space where we can tap to develop and bring the capital market to become more inclusive for developing an African economy, and of course promoting a lot more issuances on our market space. That private markets I see is going to be a game changer for the corporate bond market. It's going to be an area where I think we're going to see a lot of explosion in that space. Another key principle to address is the continuing to encourage local investors' participation in the market. We call it curing the original sin. You want to have the local participation because then that gives the confidence for the foreign participation in the markets. But then there are various considerations for this. How do locals get involved in this market? First of all, you have to make it easy access for them, but then you also have to create these pools that they can invest in. So you hear a lot of countries across Africa are now talking about national savings schemes, because that then deepens the portfolios of funds that can be invested in the local space. This is also a major factor for liquidity, because when the companies or the economies face external shocks and you find your foreign investors leaving, you want to have this core base of local investment that can absorb that shock and keep and maintain that liquidity in the market. So it's a major part that needs to be considered. Another part is about diversifying investment products. I think, and I look at this area from the legal and regulatory framework, and a lot of it speaks to what Philip and my colleague from Ghana has spoken to. adopting international best practice is always a major factor for that. Having your ISDA agreements, the GMRA adoption.
But look, I think the point about adopting international standards where appropriate, I think is a point well made, and I think a number of people would second that. One of the mega themes in the capital markets in the world at the moment really is sustainability. You can't have a discussion without having a full-blown exposition on sustainability and the role of sustainability. And we heard a little bit about that from Chandi, was talking about ESG issuance. And I'd be very interested to hear a little bit more from everybody as to how you see this developing. In many parts of the world, the pandemic has actually been a huge catalyst for the issuance of green and social and sustainable bonds, but certainly the social bond element to fund the huge domestic programs needed to deal with socio-economic impacts of the pandemic has really, it's been the catalyst for issuance this year. And you probably saw that there was a huge issue to deal with unemployment coming through from the European Commission last week, which was multiply oversubscribed. I know that the African Development Bank's been very involved in this as well. So I'd be interested to get a range of views as to how you see this developing on the African continent. One of our worries has been that, you know, with the huge focus on social, the former focus on green finance and the climate would diminish, but actually that's not been the case. And when you look at a lot of the major recovery programs, they've been hardwiring environmental concerns into both the issuance programs and also into the disbursement programs. So I'd love to get a coordinated view, if I may, from the African continent and hand it over to, I think, all of you to comment on this, if I may.
For us in Ghana, it's high on the agenda. That's one of the key things that we want to be doing going forward. So we started discussions on how do we introduce green bonds on this market. We've been talking to our Environmental Protection Agency about carbon credits. So we're on our way of looking at green financing going forward. But nothing concrete has been done so far, but we have plans to introduce that.
Chandi?
Yeah, thank you very much, Martin. From African Export-Import Bank perspective, I'll start with that. So it's something that we've been looking at very, very seriously. You know, we are a development bank and our work is more response-based. One of the things that we've been talking to our clients about is ESG and relating it to ourselves and saying, if there was an opportunity for us to be able to fund our client, we should be able to match these sustainability related projects with sustainability related finance. So we have embarked, as we speak now, on a project where we want to develop a framework. Of course, we'll be reaching out to ICMA for some insight on that in due course. But this is something that we are doing. Again, we've also seen, particularly speaking to sovereign, this issue of sustainability finance is becoming topical among sovereigns. So again, MDBs, I know a few of our peer institutions that I've been speaking to, they're also gearing up. Some of them already have the frameworks, the ones I mentioned already that they've issued ESG bonds. But we are all gearing up to prepare ourselves to have frameworks and processes internally so that we should be able to tap into this aspect of finance. What the other last thing possible that I would notice, one of the things we've actually noted with interest is initially, I think in the last few years, we couldn't see a disparity in terms of cost, particularly for issuance, whether you do an ESG bond or a conventional bond. But I think with the multiple entities that have been issuing bonds and the liquidity that's broadening and deepening at the moment, we're actually seeing some disparities where actually ESG bonds are pricing inside conventional bonds. So that's quite, I think, a very positive development. I'll stop there.
Thank you. We've moved on to sustainable finance, and actually there have been a lot of questions coming in on that, and one of them is about the timeline for ensuring that all stock exchanges can accommodate sustainability bonds, green social and sustainability bonds, as part of the Sustainable Stock Exchange Initiative. I don't know if that's something you would like to comment on, or perhaps Seiko, whether you would like to comment on that.
Okay, we've started a lot of work on sustainability, and also, as mentioned earlier on, we are working on some of the green financing products. So I can see us by end of 2021 having some green financing products in Ghana.
Very good. Zafar, we've rather left you out of this conversation because it's not immediately clear how the central bank programs would necessarily accommodate ESG, but some of them are starting to now. Is there anything you would like to say from a Reserve Bank perspective?
Yeah, quite correctly, Martin. The market has not really taken off as many would have expected in terms of issuing ESG bonds, but there have been some players in the market that have looked at it. Certainly, the SARB supports it, and we are a member of various ESG committees globally and so on. Look, we encourage that, and it improves the depth of the market, and it improves the scope of the market, which is always a good thing to enhancing our bond markets and keeping abreast of the latest products out there. So yeah, the SARB, we're not an issuer. We certainly support any type of depth of market. So yeah, I think that's something that I could add. Thanks.
Thank you very much. Jumoke, is there any final comment you would like to make on sustainability before we move on to our last question?
Yes, indeed. Thank you so much, Martin, and I'll make that quick. So in Nigeria, this definitely is now catching and becoming quite front burner. We have our SEC, having issued guidelines for green securities, and we've had at least 3 issuances in Nigeria. And so it's becoming more prevalent. From an FMDQ perspective, we actually have a green bonds development program wherein we're deliberately working with all stakeholders in the market in education, capacity building, frameworks to encourage green securities in the market. It's the starting with green, and the objective obviously will be to extend it to all other types of ESG products. From an exchange perspective also, we're now also looking at considering to include minimum ESG reporting standards for all issuers, regardless of whether it's a green security or not, just as part of corporate governance disclosures. So I think this is something that's going to take front burner in pretty soon in the next couple of years from a Nigerian perspective, and I do see that it would expand into the rest of Africa as well.
Fantastic, thank you very much. Well, what I'd like to do now, I'd like to just ask a final question to all of the panelists. We all want, I think we're all on the panel here, we all have an objective to have the capital markets play a larger role in intermediating capital in the various different economies in which we work. We want them to be a large, liquid, vibrant counterweight to the banking markets as a source of finance and in intermediating capital between those who have it and those who need it, both within domestic economies and also across borders. And I want to ask each of you, if each of you had just one wish for the next couple of years, which would help this particular process develop, what would it be? And I'm going to start with you, if I may, Philip. You have a very holistic view, and I'd be very interested to hear what you have to say.
I would say if there was one wish, it would be that the regulatory authorities continue. We've praised Ghana in this webinar, and I think it really is fair. It all comes down to regulators who need to want to develop their markets, and it's hard work changing laws and building capacity. And without a local champion, whether it be the stock exchange, the banking association, or the central bank itself, it's extremely difficult to build that kind of consensus to make the right steps forward. I would just take 1 minute to touch. There were a number of questions talking about technology and exchanges. And to clarify my earlier comment, I'm certainly a proponent of both exchange and OTC markets, and particularly where exchange-based solutions can tackle all the underlying solutions, whether it be credit risk or operational costs, technology. That could be a clear way forward in a number of markets. If you look at a country like Brazil and the way it developed its capital markets in the 90s, it was all exchange-based. But it's the basic underlying issues are the same, whether it's exchange or OTC. It's legal enforceability, it's capacity, it's technology. And we would be delighted to support anybody who wants to develop and address those underlying issues.
Thank you. Thanks for the clarification. It's an important point. Safar, I might move to you next, if I may. What's on your wish list?
I think my wish list is that we continue with regional initiatives for an integrated capital markets, really, because it benefits African economies both through the financial channel and through the trade channels. And there's been many initiatives for many years, as you would know, that have taken place, but certainly it doesn't seem to have gotten momentum that it deserves. And there are initiatives by institutions like the African Development Bank, Committee for Central Bank Governors, and initiatives by many institutions and many indices, a few quite interesting indices that have been developed recently. And most of these indices talk about 4 or 5 pillars. So if I had one wish, is really that we concentrate on 5 or 6 things in each of our markets, that we deepen the depth of our market. And by that, I mean, we have the products, we have money market instruments, we develop our repo markets, we develop our bond markets, corporate bond markets. So that's one. Secondly, we ensure that we have access, that people entering our market and exiting our market have access to foreign exchange, that there's a vibrant spot market, there's a vibrant forward market. That's the second issue. The third issue is that there's market transparency, and specifically something that Philip mentioned earlier, the tax and regulatory environment needs to be sound and it needs to be transparent. The other issue is that when investors enter your market or exit your market, or mainly enter your market, they need to understand that there's a macroeconomic opportunity here to invest into the market, so that they feel that there will be a good return. So if they understand that, then there's a clear investment case to go into our markets. Lastly, which is actually related to what I said earlier, it's again around legality and enforceability of standard financial market agreements, which allows people then to look at one market versus the other market in this continent. So if we can get those issues and we work on those issues, I think we'll have deeper and more sustainable capital markets where we would be able to fund ourselves in our local markets and in the international market, but that we could fund each other in each other's local market. But it has to be based on those issues that I just mentioned. So I know it's a long wish list, but that's essentially what I wanted to put down. Thanks, Mark.
A great wish list. Thank you very much indeed. Echo, let's hear from you.
Okay, I'll keep it simple. The economic environment is generally a very fundamental issue when it comes to the development of capital markets. So my simple wish, especially for Ghana, is to find out or to see to bringing down interest rates and inflation generally, so that we can help develop the bond market, especially the corporate bond market. So generally, the economic environment must improve so that it comes along with lower interest rates regime.
Thank you. Actually, that answers one of the questions that has come through. Jumoke, we'll move to you and then we'll finish with Chandi. Jumoke.
So I guess we have the same wish with my brother country. I would want to see enabling macroeconomic environment. You have no capital market without an enabling macroeconomic, micro and macroeconomic environment. Inflation, interest rate, foreign exchange, these are critical and important, starting from the individual country and then radiating and expanding outward to the other African countries. So I would want to see that, to support every other initiative that we would need to develop in capital markets. That would be my wish.
Thank you, Jumoke.
Thank you.
And Chandi, the final word is yours.
Thanks, Martin. I would actually wish to see the smallest countries in the world being capacitated enough to an extent where they're able to access capital markets as and when they wish, because you see, access to capital is one of the major catalysts of economic development. So that's my simple wish.
Thank you. Well, look, thank you so much, everybody. I think it's been a very rich discussion. We've covered a lot of ground. It's clear that there's been an enormous amount of development, and the development has been developing at different speeds in different countries. But overall, the direction of development has been first class, and we've heard some real success stories today. I wish you all every success in continuing that level of development. At ICMA, we remain completely committed to help you, to help our members, and to help the African capital markets as a whole develop and deepen in the future. Thank you very much to all of my panelists for joining today.
Thank you for listening to this ICMA podcast. For more podcasts and more information about capital markets, check out our website, icmagroup.org.